through the
was,
2010s, were you ever bullish through that entire period?
So I wanted to make a quick video on where I think the market is going. The last couple days have been very bullish, and we'll switch over to the daily chart in a moment, but this is the 5-minute chart. And all through today, any pullbacks have been pretty sharply bought, and even we're in the last hour of the day, and they're continuing to buy it up. And my premise is bullish. That would change if in the last few minutes here we have some sort of pullback that creates a big tail on top of the daily chart. And reversals are common in that last hour, so that's something to watch out for. But let's go over to the daily chart and give you a better idea of what I'm looking at. So several things we can break down here. The first thing I want to point out is look at these most recent 2 days. 2 very strong bullish candles back to back. And that catches my attention, and to me that looks like we're going higher. Now, I can't predict the future on the Iran war or any news-based events, but based on the chart here, it looks like that this is a bullish setup. Other things that I'm seeing. First, the big picture thing is that we have a wedge top that has been forming since April. And this wedge top, three pushes up, and then what we've been getting is the pattern that you usually get after a wedge top, which is 2 legs and 10 bars of a pullback. What I like to see normally is for the second leg to go lower than the first leg. So we can draw it out. Here's leg 1, and then pull back, and then leg 2. And so I'd prefer to see a more normal 2-legged pullback to somewhere down here, somewhere around 7,200. But we didn't get that. But what we did get is at least 10 bars and at least 2 legs. So even though the second leg did not go as low as the first leg, that's still 2 attempts to go lower. And that's really the idea that you're looking for. So 2 attempts to go lower, and then bulls are pretty quickly buying this second attempt. Other things to look at, possibly well, not possibly, but more like it is, a head and shoulders bottom through here. Left shoulder, head, right shoulder, and once again the market is buying this right shoulder. A head and shoulders bottom is really just a name for something else that I see going on, and I talk about this a lot. What's actually causing a head and shoulders bottom to happen is that there is some previous level of support, so here, and the market tries to break below that area of support, but it can't. So it tried to go lower here, pulled back on that same day, then tried to go lower again before shooting back up. Then when the market goes to retest that level, that's what it does. It pulls back, and it's unable to break below this area of support again. So it's failed twice to go lower, and the market is buying this. So yes, it's a head and shoulders bottom, but I usually see a head and shoulders bottom as more of a 2 failed breaks of a level of support. Something else I want to point out is look at this close of this bear bar. This is the lowest close in this move, and when the market was pulling back trying to go lower here, it could not get back to that bear close. And that's important. That often marks the end of a move or the end of a trend. So we have this bear close, and what are the bears doing on that bear close? They're saying, well, we have a wedge top. The Iran war is picking back up. I think that was the news kind of around this time. Iran war is picking back up. Gas prices going higher. Market probably found a top up here, and we're pulling back probably to like 7,000. And at this point, I didn't think that was unreasonable. I thought market might pull back to 7,200 or 7,000, and then would find buyers somewhere down here. So people would be selling this close, betting that it's going to go lower. Okay, so they sell the close, they sit through this, and when the market pulls back, they're really hoping that the market continues to go down because they have that short position down here. And it plays with their emotions and never quite gets back to that level. And right, how would you feel if you had shorted that bar? Every night you have to sit through this and you see it going up and up. And then once you finally get some relief and it's pulling back to your position and you're saying, okay, if it gets back lower, I'll exit. And it never quite gets back to your break-even point. As we can see this difference here. You know, there's that little bit of a gap that 10 or 20 points that just doesn't quite pull back enough for you to exit break even. And then worst case scenario happens and you get 2 big bull bars. Everyone that had shorted here is suddenly trapped into this position. And when that happens, that's usually a sign that the market is going higher. They're going to be exiting their position. If they haven't already, they're exiting their position on today. Like at the end of, if they're trading the daily chart like this, they're probably exiting on this second bar up. At least that's how I would manage a position like that. So as long as we don't have any sharp pullback near the end of the day, you know, as long as it closes something like this near its high, then that'll be a good sign for buying for the rest of this week and probably for the next several weeks. So I would see this as a bullish sign. So for someone wanting to swing trade the daily chart like this, how would I manage this trade? Well, you want to make sure you're buying above the strong bull bar. Some people might just buy the close, and that's fine. Either way, however you get into the position, you want to go for at least 2 times your risk. So you should be swing trading, and you know, in this case, when I think there is such a good chance that we want to get higher, we want to get up to 7,700, then you want to be able to, or 7,800, or really I think we're going to 8,000 ultimately by the end of this year. So when you have this larger opportunity for profit, then you need to try to grab that. You know, if you're cutting yourself short too much when there is large opportunity to win, that's bad math. And it's not going to work out very well in the long run. So in this case, I think trying to swing trade would be a good thing. If you're buying above this bar, I think it's safe to put your stop below it. And here's 2 times your risk. And if you're bullish like I am for the rest of the year, then you know, only take off half of your position or so around this 2 times risk, and then you know, so exit half, and then if it continues up, then just hold that up and move your stop up as if you're letting the trend continue. Here's the fear and greed index. This is always kind of fun to watch, and it actually can act as an indicator on when to buy or sell. So it tracks things like the momentum in the market and the volatility. And of course, when there's fear or extreme fear, then the market has been selling an awful lot. Or when there's greed or extreme greed, then the market has been going up quite a bit. And what's funny, we dipped into extreme fear just in the last, I think, Friday, and then probably more in the last couple of weeks, we were in extreme fear. And if we're going to look at the daily chart, so here's when we were dipping into extreme fear. And if we zoom out, so you're telling me that this little move down caused the market to go into extreme fear. I don't know. That just seems a little silly to me. But regardless, historically, when it goes into extreme fear, then that is a good time to buy. Another thing that's silly is how the news rolls out permabears when the market has a few days down. And you'll notice this, the emotion flips so sharply when it comes to the market and how the news portrays the market. So like the last few weeks have kind of been sideways to down, and you're seeing guys like this come out of hiding, and you know he's saying don't own U.S. stocks. He's thinking, or he's warning that there'll be a 70% decline in the market. Okay, you know that might happen again one day. The problem is he's been saying this for like 30 years. I watched a clip of him recently, CNBC, and the hosts were pressing him on Was he bullish between 2010 and 2020?
But through the
2021
2010s, were you ever bullish through that entire period?
2009, almost there. I posted my only one-pager called Reinvesting When Terrified.
But most of the time,
by a miracle,
but it was a big bull
hit the
market,
bottom,
2010 to 2020.
666.
Okay,
And nobody else, by the way, was touting the market that week, that month.
But through 2010, a huge bull market to 210 to 220.
And ultimately, he didn't really have a good answer for that. He's one of these types that are just always bearish. And if someone is always bearish, then they're missing the best moves. Yes, if every year he comes out and says this year's going to crash, then once every 15 or 20 years he's going to be right and he looks like the genius. But when the real money is actually just made from just buying and holding throughout the decade and even sitting through and buying more during those crashes and not really worrying about the crashes. Now, if the market does start heading up strongly again this week, next week, you're going to see all this go away. Immediately, you're going to start seeing, I don't know, they'll bring out Tom Lee. He's saying we're going to 8,000, 10,000. And it's just funny how it switches so quickly. And if you pay attention to the news and what the market's doing, then you'll see this too. So it's just something I wanted to bring to your attention. But thank you guys for watching. I do hope the market continues up. I do think we'll get to 8,000 by the end of the year. And I think that would be great. And if it does, then we will reassess from there. Thank you guys for watching.